It looks like NIO still needs several potential catalysts to get back on track. Investors who hoped that the company moved closer to profitability seem to be disappointed. So considering how stocks rise and fall, and comparing that with the company's current events, we wonder, is NIO stock about to dip again? Hello everyone and welcome back to another exciting video. Today we'll be talking about the possibility of NIO stock dipping again or not. Well, it sure did create a sense of alarm as many investors and prospects are left in confusion about the sudden fall in stock. Don't forget to subscribe to our channel and turn on the post notification to stay updated on all our exciting and enthralling content. We'd also like to hear your opinion on this topic, so feel free to drop your thoughts and opinions in the comment section below. Alright, General Motors aims to catch up with Tesla on EV sales. It seems investors are weighing the impact of rising competition on the Chinese automaker's prospects and finding it worrisome. Yes, some are worried about NIO's prospects, but the company has its growth plans in place, we believe. We also believe this issue is all about positioning. But let's get to understand a few things about the NIO company. First of all, before we dive into the subject of this video, NIO is a motorized industry that is on the verge of a thorough remodeling. Gone are the days when manual vehicles existed. Nobody wants that anymore, right? Everyone now wants to own a vehicle that's smart, connected and sustainable, but also self-determined. That's exactly what the future vehicles are all about. The NIO team believes products and technology must change along with the way people use them and their entire ownership experience. Their desire is for their customers to feel optimistic and passionate about owning a car. Of course, people love anything that is customized enough to their taste, and this makes them crave a personalized experience. We'd agree that this kind of craving affects every other aspect of our individual lives. So, the NIO team presumes that they readdress premium service by creating products and providing services based on their users' ideal vehicle. With their users as their guide, electric vehicles are the natural choice for everyone, leading to a more sustainable tomorrow. The Norway-based company, NIO, continues to witness a booming and prosperous business due to the ever-rising demand for its luxurious electric SUVs, while growing its lineup of electric cars and innovating EV batteries. In 2014, the NIO company was founded by William Li. At that time, NIO had very little experience in vehicle manufacturing when it found its way into the market. But the EV startup promised a bright future. Its Chinese name, Weilei, means blue sky coming. NIO does not make its electric cars, instead they partner with the state-owned auto manufacturer. NIO continues to grow EV sales after more than doubling them in 2020. It also came back from the brink of bankruptcy last year. But NIO faces rising competition from Chinese tech and auto giants besides Tesla, the global EV leader. By 2030, fully electric and hybrid EVs will make up 90% of new car sales in China. NIO CEO William Li forecasts. That would be up from about 10% in March 2022, suggesting ample room to grow. NIO plans 3 new EVs in 2022, including the ET7, its first electric sedan. The hot Chinese startup already makes 3 premium electric SUVs, including the ES8, ES6, and EC6, and you can consider them to be the next generation car company. So what happened? We're hoping by this time everyone must have dropped their comments and opinions in the comment section below because we're about to dive into it right now. So widely followed Chinese electric vehicle EV maker NIO released its third quarter financial report, and investors are having mixed reactions. NIO's chief rival Tesla is firing on all cylinders. After Tesla bagged an order for 100,000 electric vehicles from rental company Hertz by the end of October, it was back in the news again this November after Hertz struck a deal with Uber Technologies to rent 50,000 Tesla EVs. Although the development was built on Hertz's previous order, it reflects the massive potential of the EV industry and the unmistakable traction that Tesla has already gained in it. It's also racing ahead in NIO's core market of China. This November, General Motors CEO Mary Barra told CNBC that the auto giant could absolutely catch up with Tesla on EV sales by 2025. In June, GM announced an ambitious goal of selling more than 1 million EVs worldwide by 2025, backed by investments worth $35 billion in EVs and autonomous vehicles over that period. NIO had previously reported that it delivered 24,439 vehicles in the third quarter, more than double what it reported in the year-ago period. That figure also exceeded lowered expectations after the company alerted investors that supply chain constraints were affecting production. But third quarter results showed the company's net loss and operating losses grew sequentially from the prior quarter. Revenue of more than $1.5 billion was 16% above the second quarter as the company delivered 12% more vehicles in the third quarter. But it said vehicle margin dropped more than 200 basis points sequentially from the previous quarter. NIO stock gapped lower on disappointing October delivery results, but has revisioned higher. Investors are hoping that'll run through to the end of the year. We should also know that NIO stock bottomed in May when the bear market in growth stocks came to an end. Amidst the stock's most recent corrections, shares bottomed in early October and gave investors a higher low to work with. So far, the stock is forming a giant wedge, marked by higher lows and lower highs. The last 2 weeks of trading were in a more than narrow range, which looked to be breaking with some gap downs. However, the 20-day and 50-day moving averages combined as support, allowing NIO to rocket higher. Now back above the 10-day moving average, bulls need to see the stock clear the daily VWAP measure from the July high. If it can't clear this mark, which has been stout resistance for months, it puts the 200-day moving average and downtrend resistance in play. On the downside, losing this week's low would deal a tough blow to the bull case, putting the weekly VWAP measure in play. That measure is followed by a possible test of uptrend support and the October lows. But the drop in vehicle margin is noticeable for investors who might have at first only looked at the gross margin, which grew. That increase in gross margin, however, was due to sales of automotive regulatory credits, according to the company. Vehicle margin dropped, it said, because of increased financing at subsidized rates for vehicle purchases that resulted in a deduction of vehicle revenue and an increase in tooling depreciation cost. And the bottom line was a loss of about $130 million in the quarter compared to a net loss of $91 million in the second quarter of 2021. Investors who hoped the third quarter was another step closer to profitability were disappointed. But NIO shares likely are holding up today because there are still several catalysts coming that look promising. NIO began selling in Norway earlier this year and will expand in Europe with sales planned in Germany next year. The company has said it plans 3 new products in 2022, including the highly anticipated ET7 luxury sedan. Those plans are likely what helped keep the stock trading in the black today as investors digest the third quarter results. EVs are a hot market right now, and this is just the start. It's thus unsurprising to see competition intensifying as nearly every automaker strives to get a piece of a market segment with exponential growth potential. Does that mean NIO will be edged out? We don't think so. In a short period, NIO has established itself as one of the top luxury car makers in China. It delivered more vehicles last quarter than it ever had before, recently began selling in Europe, and is set to launch its first electric luxury sedan, the ET7, in China as well as Norway in 2022, even as it prepares a blueprint for low-priced models to target the mass market in China. NIO's battery as a service program also gives it an edge over rivals, especially among cost-conscious consumers. So while Tesla's wins may rattle NIO's investors momentarily, the Chinese automaker is a long-term growth story and looks like one of the most promising EV stocks right now to buy on a dip. So as we can all see, nobody knows for sure what will happen next, though we're sticking to the good side of the news to come. We're thrilled, but we can only wait. While we're at it, don't forget to hit the bell icon to be the first to get notified of our subsequent videos. Give this video a thumbs up, subscribe to our channel, and let us know in the comment section below what you think about this video. Thank you for joining us today, and we'll see you next time.